hello again, and welcome to the latest installment of our free financial educational blog site, Smart Financial Future. I'm John Williams, Certified Financial Planner. Why don't we get started? Here's a pretty common question. How is the market doing? The market that people are referring to in that kind of a question is usually the Dow Jones Industrial Average. Most folks just call it the Dow for short. Did you know the Dow was created back in 1896 as an attempt to gauge what the overall stock market was doing rather than just looking at some individual companies? Initially, the Dow was represented by 12 companies from American industries that were popular at that time. Nowadays, and for many years, the Dow has been 30 US-based companies across industries that are prevalent at that time. Let's take a look at the current holdings that make up the Dow Jones Industrial Average. As you can see, these are very recognized companies such as 3M, Exxon, General Electric, McDonald's, Walmart, Disney, as well as others. Now, some of the companies that you just saw have been in the Dow for many years, while others have been in for just a short time. You see, the components that make up the Dow change from time to time as their selection committee sees fit. So at the end of the day, someone, a group of people, just decides what's going to be the makeup of the Dow. Keep in mind, this is the gauge that people use to know if things are going up or down. That committee does have some criteria to go by, but in my mind, it would be a little bit like you and I deciding, and then everyone else just following along. I say it that way because when you compare your personal investment results against the Dow or another market index, for that matter, you can start to see how doing something like that really is pretty arbitrary. If you don't happen to own those same stocks as the Dow, and also in the exact same weighting as the Dow, your returns just won't match. So be really careful about overemphasizing those kinds of comparisons. Rather than comparing your returns to some arbitrary index, it's probably a lot smarter to just make sure you're on track with your own long-term goals. Oh, speaking of the weighting of the stocks in the Dow, a lot of people are really surprised to learn that the stocks in the Dow are not equally weighted. In other words, each of those 30 companies isn't 1/30th. Instead, the folks at Dow Jones do something called price weighting. That means the higher the stock price, the more weight that company is given in the Dow. So up or down moves of a stock like IBM, which is currently more than $170 a share, has a lot more impact than a stock like Coca-Cola, currently at $40 a share, or even Procter & Gamble at $80 a share. At the end of the day, just be aware what market indexes like the Dow and the S&P 500 really are. Also keep in mind their inherent quirks like I've been talking about here today. But most importantly, be sure to compare your progress to your own goals. This has been John Williams with the free financial educational blog site, Smart Financial Future. Don't hesitate to let us know if you have any questions, and we'll see you next time.